Okay, we're gonna get ready to get started. Just if you can hear me now, just please let me know that you're hearing me come through before we get started, so I know that you can hear me. I think that makes sense. But if you hear me, just give me a thumbs up or everything's coming through, and we'll get on shortly to start covering what could be a very interesting day ahead. Okay. Okay, good morning, everybody. I am not sure if I'm coming through because I'm looking at the feed in the chat room, and it doesn't seem to be following so well. So hopefully, I'm coming through. I know that there's a bit of a lag, so I'll wait to see. But as I'm talking and as you're seeing the charts moving behind me here, just let me know that you're seeing me coming through and you can hear me. I know that there might be some blips between the video and the audio. Hopefully that's what it is at this point, because if you can't hear me, then well, there's no point on doing this. But I'm gonna look into these OBS settings to see if we can get this streaming smoother next week. But all of this is new to me, so your patience is appreciated. But hopefully the content will more than offset. Okay, you're not seeing me? Okay, hold on a second. I see me. Hold on. Let me see what's going on here. Trying to get it on. Nobody's seeing me out there? Let's see here. Okay. Let's see, video transition. Video transition. All right. You should be able to see me. Just let me know if you can see me and I'll get going. I just want to make sure that everything's kind of working the way it should be. So when I see somebody type in that they can see me sipping my tea, I'll get going with this session. Quite a bit going on today. So LAC, I don't know what that means. Oh no, I don't know what that means. I'm not great with acronyms, I guess. Okay, there's quite a lag here. Okay, just waiting. Stream. I'm not sure what's going on with the stream right now. I hope that you can see me out there. Can hear you and see you now. Awesome. Okay, great. I don't know what voice in the bag, but that's great. Okay, there's a bit of a lag, but I'm going to get going now and get started with the session. A lot to cover, and you can put your questions in here, and let's get going. So into Friday, dollar getting crushed across the board. This is not something that's been new. The dollar's been getting killed in 2017. You know, what started out as looking like it could be a correction for the dollar in an uptrend at the start of 2017 has turned into a disaster for the dollar. Just to go through some of the key underlying drivers, let's do that. First and foremost, yesterday's ECB decision was not dollar bearish. I mean, certainly not dollar bearish in the sense that the ECB did what was expected. They held. They didn't provide any significant detail when it came to QE, tapering of QE. So, you know, maybe they hinted that it would be in October, but you know, we knew that. So nothing new there. And they expressed some concern about the strength of the euro, which means that, you know, when you express concern about the strength of a currency, it certainly shouldn't be super bullish, that currency. So it's important to understand that, because when you understand that, you kind of say, well, then why is the euro rallying? And the reason why the euro is rallying is because it really has a lot less to do with what's going on in the Eurozone and with the ECB, and a lot more to do with what's going on in the United States right now. Very, very negative dollar outlook right now. First and foremost, something that's been driving the dollar lower all year behind the scenes, just this soft US dollar policy that continues to kind of happen behind the scenes. But there's been a clear desire for the US administration to promote a soft dollar, because a softer dollar will, you know, you want to make America great again, as Trump says. You bring jobs back to the US, you manufacture in the US, and then you export. Exports, you want a weak currency, and so that has been behind a lot of what's been behind this move. But there are other things going on, right? We've had not the best economic data in the US in 2017. There were signs of maybe a nice little pickup, but then, you know, back down again after the recent unemployment report, the jobs report. Let's not call it the NFP report anymore, because that's not what it is. Right? It's not the unemployment report. I shouldn't have said that. It's not the NFP report. It's the hourly earnings report. That's really at the center of everything that's going on right now. Great. I'm glad everything's working good, because it's nice to know that things are working. So that's good. But the hourly earnings, right? That's the most significant indicator out there. And that's what needs to be focused in on with these, because that has an impact on inflation, which is non-existent around the world these days. And so that's where we need to see things pick up. So it's the hourly earnings report. But so economic data has been slower. That's forced the market to sort of buy back into the Fed not following through with their guidance yet again in 2017, which is still calling for another rate hike. So we'll see what happens. But that's going on. Hurricane season, not good, right? There have been a bunch of hurricanes, another one expected to hit Florida, you know, and do damage. That's causing worry. Debt ceiling issues. Yes, there was a delay to the debt ceiling to December, but, you know, just a delay kicking the can down the road. That's going on. And the list just goes on and on. And so, yeah, and there's been some positive developments abroad outside of the U.S., but there's just not a lot that's supporting the U.S. dollar. The most interesting variable that's been weighing on the dollar, or where the dollar's not been benefiting where it's traditionally benefited, is in flight to safety flow. So traditionally, if the markets are getting nervous and there's a lot of tension, okay, like we've seen with geopolitical tension, there is this sense of global instability. There's a shakiness as we start to talk about monetary policy reversal around the globe, and yet the dollar is selling off. And that's not something that's common with the dollar, that it should be selling off in safety environments. So that's an interesting one that I don't think will persist. But the big if there is we need to see downside pressure in equities, which is necessary, definitely necessary. Again, we've had a run of record highs for several years in the stock market, and not getting into the trading side of things, but I'm just talking about the fundamentals here. The strategy, and I've talked about this many times, the strategy back in 2009 was to get out of the crisis. The best way to do that was to lower interest rates, make money cheap, incentivize investors to take that free, cheap money and put it into stocks, and at all costs to stimulate growth or create a sense of, things are going well, and hopefully that would translate and trickle into the economy and the global economy, because this was a strategy that was, followed through across the board. And so we're at this point where the reversal of policy and kind of Fed and central bank policy doing everything it's been able to do at this point should start to weigh on the stock market. It really is that simple. The logic is that simple. It's not complicated, and whether the market comes off now or in a month or 2 months or next year, I don't know. And that's not the point here. The point is, though, that there needs to be an appreciation for this fact that the stock market rally, whatever happens, is something that should see a major shift, and it needs to happen. And it's not normal when you're in the current market environment. Excuse me, I'm gonna have some tea. I put lots of sugar in my tea. Lots of sugar and milk. I should be putting honey, I know, but lots of sugar. People are disgusted at how much sugar I put in. I have to, when I go into stores to, like, if I go into a coffee shop to buy some tea, I'm not a coffee guy, but if I go get some tea and I have to go over to the side, I hide how much sugar I put in my tea. It's like embarrassing. I'm like a child. I also like orange. What are you gonna do? Anyway, thanks for that. So we have the stock market that needs to correct, and that we need to see volatility rise. It's not normal that you see so the VIX is a good indicator of volatility, and that's been sitting down at these historic lows, and it's not normal to see that stagnate like that down there. So I'm sorry, guys. I'll get into your questions in a second. I want to sort of go over a couple things, and then I'll get in. But maybe let me just look, because this format is something that's new to me. Yeah, everybody can see me. Everybody can see me. Dollar yen. I'll get to dollar yen. Good. Okay. Mexican earthquake. Yeah. Okay. Thank you for that. Tsunami fears. Yeah, it's all crazy out there. Okay. So back to the fundamentals. So we're seeing the dollar get slammed across the board again right now into Friday after the ECB decision, which was just a catalyst. But again, as I said at the beginning, not really anything happening in that decision on the surface that would suggest that the euro should be rallying. Okay, so where are we at? Dollar yen has broken down to fresh 2017 lows. So when you look at dollar yen this year, for much of this year, the market had been consolidating, roughly between 108, which was a really strong support level, and 114, 115 up here, right? So we've been seeing this consolidation. Now, dollar yen fundamentally is a market that people like buying. The yen weaker, and I hear that, but at the same time, it still is benefiting from its traditional safe haven correlation. So the yen is, that is, so dollar lower, yen up, and then now with the dollar not getting any safe haven flow, the yen's like taking a lot of that, and the Swiss franc doesn't want any of it. The Swiss franc doesn't want to have it. The SNB is like, no, we're not taking that flow. So it's the yen. I mean, amazing, but I don't think that's going to last. And so we see dollar yen breaking down now, finally below 108, and that could be a big deal. Right, so when we look at the weekly chart here, as crazy as it sounds, and I don't know why my weekly chart is not updating. Let's see here. Let me do that again. All right, and nope, weekly chart not updating. It's nice. Okay, so when we look at dollar yen, I pull it back now because I'm going to go back. You can see that we're breaking down right in here, and this breakdown in here could open the door for a measured move downside extension to the 102 area. Okay, so we could be looking at a drop in dollar yen down towards the 102 handle over the coming days and weeks. That's a possibility now that we've broken down below this range low. Why? Because we were trading roughly between 108 and 115, let's say, just to keep it nice and simple. So 108 to 115 is 7 big figures. The drop below 108, 7 big figures lower, takes us down to, well, it takes us down to the 101s, but let's say be conservative here and say 102. Okay, so that's kind of, that's a possibility with dollar yen, especially if you consider the fact that it's still correlated with, the yen is still correlated with dollar yen is going to drop if equities come off. If that correlation is still there between dollar yen and equities, then equities haven't even come off yet. So that could be pretty scary. Again, not sure, but something to think about there with dollar yen. Okay, now I put in today's update, I put in, what did I call it? I forget what I called it, this title, and I don't want to start moving around here, but how to basically trade in this market without any stress in FX, how to trade FX markets without stress. And it's important to talk about this because it's not an easy market to trade. And so if you want to trade this market with success, I hate seeing these drop frame numbers. Are you guys still hearing me out there? If you're still hearing me, let me know, because this is really frustrating. I'm seeing drop frame numbers. It's more important that you hear me than you see me. And if I'm breaking up, I'm gonna have to figure this out because it's really, oh, they're live stream offline. Great. Let's see here. I'm back again. I see I'm coming back. Just let me know that you're hearing me, because if you're not, then it's what's the point again? So I talk about, it's FX markets are not, no markets are easy to trade. It's never easy to trade markets when you're not sure what's going on. Hold on. I'm going to take a sip of tea while I see the live stream is offline and struggling right now. So, no markets are easy to trade, okay? But what you need to do if you want to trade successfully is you have to stop focusing in on the dollars and cents, and you have to think about the percentages, and you have to understand the market that you're trading. So for me, what that means is that FX can have some huge swings. So what I want to do, okay, is I want to say, okay, FX can have huge swings, but let me adjust my strategy to accommodate that. Now that might mean that I have to take smaller position sizes, but I'm still going to look for nice returns. Okay, so yeah, an FX market can move like 400 or 500 points in a day or two, and it's nothing. It doesn't change anything. It doesn't change anything. So you have to kind of think like that. That's kind of how the bigger players think. If you look at like kind of like the big banks and the buy-side funds, and the sovereign wealth funds and all the sort of big money in FX, right? They don't worry about 200 or 300 point moves. And so it's very important, I think, to have that understanding of the way the market works, because if you try to kind of get in with 20-point stop losses, and if it works for you, great. Like more power to you. But I can't trade like that. It's not good for my stress levels either. When you take those types of positions, and I do it anyway when I'm trying to manage sometimes positions. So it's enough for me. Wow, this stream must be really lagging because I'm not even seeing you guys comment. And hold on, no, I'm not seeing any new comments come through. And I asked you to sort of say something a while ago, so that's not encouraging. Anyway. So what I try to do with my strategy is I try to think like that. So one of the indicators that I look at that I've talked about is ATR, and I look at average true range, and that kind of tells me, the average range a day in a market, or the average range a week, whatever time frame you're looking at. So for example, dollar CAD. Okay, I bought dollar CAD. Okay, I bought dollar CAD this week. I bought dollar CAD at 122.25. Okay, now how did I buy it? Yeah, I was playing around. I bought dollar CAD unleveraged, completely unleveraged at 22.25. Okay, so what does that mean? Buying it at 22.25 unleveraged? It means that if I'm unleveraged and I'm looking at this chart, I can say, you know what, this chart, dollar CAD's definitely dropping. It's really oversold, so I think really due for a bounce, but there is some major support down here, okay? Major, down around, 119.20. So I can say, you know what, I don't want to, I'll get out of the position if we get below there, okay? Down below there, fine, time to exit. But anything in between, I want to give myself an opportunity to be able to take this position and trade this position. And so I don't want to be out of the position any sort of at this point here where we're trading at 121. I don't want to be sweating. I don't want to be, stressed out. So yeah, we're trading around 121 right now, 120.86. I'm long at 22.25, so basically one big figure away. Yeah, so I'm now out of the money by 1 to 1.5%. Okay, if this trade doesn't work out and it's a disaster for me, I lose 3% of my equity. Okay, I traded on this strategy for many years. I've traded on this strategy. Last year, I had an amazing year, and it wasn't using a lot of leverage. Sometimes I'll use 1, 2, 3 times, maybe even 4 or 5 times sometimes, but never, using too much leverage. And if you do that, if you just trade on, 1 to 2 or 3 times for the most part, you're talking about, unleveraged, you can generate up to 20% returns on a year. So if you're using 2 to 3 times, that's 60%, 70%, 80%. And so you really need to take that, into consideration with your trading. And again, it's really important. Yeah, I'm getting thumbs up now. It was like 20 minutes ago that I asked. And that's just, thanks guys. I'm just glad that the stream's coming through. So hopefully when I look back and play it back, it will all have worked out. I'll try and go through some of the other stuff. It's just the stream keeps going in and out, and I see it dropping and then coming back on. And that's great. I'm getting good comments that you guys are seeing it, but it's frustrating to see, like, I see this red and I see frames dropped, and yeah, okay, fine, it's lagging there. As long as you guys are seeing it, it's fine. Because it's also like, it's hard to focus on talking, not knowing if you guys are listening, and all the things I'm talking about, I'm kind of thinking, are they even listening? So, and I think they're important. They really are. Because I'm telling you right now, been doing this for years, and I've had a nice amount of success doing it. And so, I'm fully transparent with all that. And I'm not having a great year this year. Not having a great year. Kind of flat on the year. With this trade, a little bit down. It's fine. Last year, a great year. Year before, a great year. Year before that, really good year. Maybe I won't have a great year this year. It's fine. But if you trade like this and you give yourself some room to breathe, then you can catch moves. So with dollar CAD, super extended, but I want to be able to catch the move. And I think that, yeah, so I said maybe we can get down all the way below. So now I have a long position in play from 122, which was just yesterday, right? It seems like it's miles away. But like, I know that people that are trading dollar CAD on leverage, they're like, oh my God, like, that bag that I had at the beginning of the show here, they're like, this is crazy and I'm going to be sick. I don't feel sick right now, so I feel a little my voice, but, and so I think you need to trade like that. So when you trade like that, the risk reward dynamics shouldn't change, right? So if I'm risking 3%, then I'm looking for whatever it is that I'm looking for to the upside. Maybe I'm looking for 1-to-1 because I think it's a pretty high probability strategy. Maybe I'm looking for 2-to-1 or 3-to-1. That all should be the same, but you need to give yourself some more room to trade and to breathe, and kind of, if you think like the bigger players out there and you give yourself bigger room, yes, you can't take the same position sizes. You have to, you got to take smaller position sizes, but that's fine. Just try and trade well. Don't focus on the dollars and cents. Focus on the percentages. So many people struggle with it. I did. It's very hard. It's human nature. There's a lot to talk about as we continue to do these sessions. And do me a favor, please, but keep dropping from the time to time. Okay, it's frustrating. What are you going to do? Hopefully you'll hear this. If you guys are listening or you're watching the playback, if you feel that you kind of start trading, okay, when you start trading, there's this pattern. You start trading, you have a couple of good trades, you make some money, you feel in control, you have one bad trade, one losing trade, and you say, okay, but it gets in your head. And then all of a sudden, for some reason, even though you've done it before, you take a trade that you shouldn't take, and then it snowballs. all of a sudden you see your wife and you hate her. You see your kids, you hate them. You don't want to look at them. You hate everything. You want to throw up. Your account goes to nothing. Why me? Right? If you've done this and you've lost a ton of money, okay, please let me know. I think there's a messages here. Please, you don't feel bad about it. It's kind of supposed to happen. I can help. Okay, I have really good ideas where I think that they can really add value if you feel this is you, because for a few months I really can help with that, and I think that a lot of people need that. They need to have a little bit of help there, and I can help with that. And I'm trying to put something together really exciting with Nick over here that stay tuned, but it's really going to add value. No crap, no nonsense, no magic, just really good stuff. Okay, so let me get back to the market, because all this stuff is really important, because I think that trading can be done. You gotta know how to do it. Okay, so let me talk about another trade, and then I'll get into the major currencies. Don't worry if I run over a little bit. I want to get to what you want. Just one more trade where I see this sterling CAD. I sent out a recommendation on the strategy recommendation. Now I have my dollar CAD exposure, but I sent out a recommendation here early on the Forex signal site, along at 160 recommended, targeting a huge move, plenty of upside, right? And I didn't think that we get back below the Brexit lows. That was the strategy. I didn't think we get back down below here. Okay, so still plenty of room. Maybe we do, right? But again, look at the risk. Not a ton of risk for a really strong risk reward trade. And again, looking for a reversal here. We're at 158 and change, so 159 about the long from 160, not far away. Stop loss still quite a ways away. One reversal day, get this thing going back to the top side, get back above 163.55, and really starts to look good. This market can move fast one way, and again, we know how things have been going for the Canadian dollar. Okay, major currencies. I know that somebody asked about oil. I do take intraday trades. I definitely do that, but they have to be like slam dunks. And every single trade I take, I'll give you 2 rules that I live by. No textbook, no hard, high finance, nothing you have to kind of wrap your head around that's over your head. 2 rules. 1, okay? 1, I shouldn't do it with this finger. I should do it with this finger. 1, every single time you take a trade, make sure you're really committed to it, right? And 2, make sure you can sleep at night. If you can't sleep at night and you're up and then your position's too big. That's it. You're not gonna get there if you're leveraging yourself. If you don't have the money, then just trade with the smaller funds and focus on your percentages. If you have really good percentage returns, you'll have every confidence to go find that money. Believe me, if you can trade and generate 10 to 15%, okay, after the year, and that 10 to 15% is $300, right? Doesn't matter. You'll say, wow, I did this for an extended period of time. You'll go running to find money, and money will come pouring over into you. So you don't have to worry about that. It's just a question of taking a little bit of time. I can help. But again, send me messages if this resonates with you. If it doesn't, then whatever. Don't worry about it. All is good. So the euro. Let me focus on the euro. Again, another important one to pay attention to. The euro is broken out to another 2017 and plus 2.5-year high. Okay, taking out 120.70. Okay, so on the one hand, the break above 120.70. Now, if you look at this recent move, we had a higher low here around 118.20, broke above 120.70. This projects upside into the 123s, okay? So that's kind of like the next measure move extension up into the 123s. That's a possibility. But, and I say but, when you look at the weekly chart, okay, when you look at the weekly chart, this is pretty extended. Now, certainly there's plenty of room to go from here. But it's getting to the point where I do think that there's a much bigger correction in the euro coming to the downside, because now it's a correction because we broke out above 117, which was a signaled a structural shift, but I do think there's a big dollar run about to happen. Don't tell anybody. I think there's a big dollar run that's going to happen soon. I don't know how long it's going to last, but I think the dollar's going to have a big run. Nobody thinks it can, but I think it can. I believe in the dollar. I think it's going to come back. Safe haven's going to maybe help it. I'm whispering, so if you hear me whispering, I'm supposed to be. I don't know why I continue to whisper, but it's Friday. Helps my voice. Okay, that's that. Okay, so let's see what happens today. There's plenty of economic data out going on right now. In Europe, Canada employment report's going to be a big one for me. Maybe it's going to be amazing. Could be, and dollar CAD drops again. We'll have to wait and see. Maybe it's not so great. That'll be interesting. Anything else? Let me see. I'm really disturbed by the fact that this stream is lagged a little bit, and I just want to get the settings set up right. So this is my bad, and I'll try and get it fixed because I enjoy doing this. Take some more tea. I'm gonna sign off. Send me messages. Oil. I know somebody asked about oil. I'm sure people ask about other ones, but oil. It's pretty choppy. I mean, it's just, I don't really have any good opinion about oil. It hasn't, it's gone up, it's gone down. I think overall on a medium to longer term basis, the chart looks kind of constructive, but I don't have any real strong opinion about oil. Gold now getting interesting, right? So the gold is getting up to the 2016 high